We shall start with our webinar because it's 2 minutes past the hour. Thank you so much for everyone who dialed in from wherever in the world. We see it's really diverse. I'm based in Switzerland, Geneva. I am the president of International Organization, Women International Trade, and I'm happy to do the welcome, open the webinar, and leave it to the experts to take it forward. With that, for the ones, and I know some of the crowds do know of it, some don't, a little bit of a background of organization Women International Trade. It's has been created in 1989 in Washington, D.C. This is where our headquarters is. And this organization is a global membership organization for women and men, so we welcome men as well, working in all facets of international trade. It's designed to promote the advancement of women in trade and business, and it's one of many business support organizations globally that support as well as facilitate opportunities for women in trade. We are acting like a bridge. We are a bridge between international networks and markets, and we are a global membership organization. As we speak, we've got about 27, 28 chapters, mainly in the US, Canada, and also Africa. Due to the African Free Trade Agreement, we are flourishing there like crazy, and we're supporting small, medium-sized, women-led businesses in terms of capacity building, in terms of network, in terms of very strong partnerships and alliances and collaborations, and also in terms of supporting our members with different webinars like these that we're going to have, with webinars with our partners and alliances, but also with podcasts, with shining the light on small, medium-sized success stories. We always have Spotlight, the member Spotlight, for example, and many more. So I'm really happy and proud to be associated with this organization more than 10 years. I started as a corporate sponsor, slided in, and here I am, the international president. With no further ado, I would like to hand over to Angela, who is our moderator from Organization Women International Trade. Also, years and years within the organization, she knows everything in the ins and outs, and I always ask her if I am in doubt. Angela, the floor is yours.
Thanks, Leanne, and thanks to a great membership. I think the one thing that I've loved about being involved in this organization for decades is just the strength of our global network. Just the amazing members across the chapters that, as Julia mentioned, we have virtual members, we have members who are entrepreneurs, who are doing trade, we have members who are enablers, they're in customs, and we have policy people like making those changes all across the board. So from those policy capitals to the places where entrepreneurs are growing, it's a really great place. So in this last year, I also serve as the vice president for programs, and have loved coordinating a series this year that we call How to Successfully Navigate Global Trade. So know it, make it, move it, sell it, grow it. And that's been a really fun series. We launched it this last year, focusing on everything on the geopolitics of what's happening. Feels like we need a refresher on that one too. Lots of this happening in the new year. To the logistics, what do you need to know in terms of making sure your product's ready to move, to the financing portion, to the area of marketing. What are some of the tricks and tips to marketing and leveraging things such as e-commerce and more and getting into your market? And we're really excited today to be working with our colleagues at the World Bank who have an amazing wealth of knowledge in this space. So they're going to be talking about Be Ready 2024. I'm going to introduce them in a moment, but I have to give our housekeeping. That's always the fun part about our webinars. And you all know these ones. So today's discussion is off the record, not for attribution. The materials are protected by copyright, may not be reproduced, distributed, transmitted, displayed, published, or broadcast without the prior written consent of OIT and our colleagues at the World Bank. Should you have any questions, yes, we know that chat is disabled, so put it in the Q&A box. And we're going to try to keep this question going. We know you have lots of questions. We're going to take a number of questions at the end, but if you have a burning question during the session, don't hesitate. Like, raise your hand, put it in the question. I know our colleagues and our presenters will be happy to have that discussion too. And I know this group isn't shy, so come with lots and lots of questions. We want this to be a great conversation. Again, We'll have questions at the end. If you have any questions about hearing, audio, just flag it to us as well. We will be able to sort through those IT issues as well. So without further ado, I'd like to kick this off. Again, this has been a series around how to successfully navigate global trade. Lots of new rules, lots of new regulations, but I also think that means lots and lots of opportunities. So we are really excited today to have our new partners from the World Bank. And I'm going to turn it over to Margarita. We've got their resumes and bios within, but they are together, I believe, in the Washington, D.C. office. I'm going to have her introduce her team, and then we're going to turn it to our special guest speakers, and Melanie, to share more about an amazing study they've just done. And we can talk a little bit more about some of the work they have, particularly in the gender and trade space. So, Margarita, I'm going to turn it to your team. Thanks for being here today.
Thank you really so much. I mean, we are really honored to be here. We're really delighted to, for the first, well, it's not the first step, but one of the first steps of this partnership. And we really look forward to continuing working and engaging with OWIT and with all the chapters, obviously, across the globe. I'm going to be extremely brief and I'm going to pass it to my colleagues. But yeah, my name is Margherita and I've been working here for the last 6 months almost. And originally Italian, specializing in international trade law. So I'll pass it to Nuno.
Thank you, Margarita. And first of all, good morning, good afternoon, good evening, everyone. I would like to really extend a special thank you to the organization for organization of Women International Trade, for the organizers of the webinar, Angela, Julia, all those that we were in touch with. My name is Nuno Mendes dos Santos. I'm the lead for the international trade topic at the New Business Ready project. And we are really, really excited to share this report with you. First of all, before anything else, I want to ask you if you used or produced the Doing Business report that our team also produced in years past. If you have done so, could you raise your hands in the chat? In the app. So, as you may know, the Doing Business report was discontinued 3 years ago, and it left a void. It left a void in the lives of all of us that work in international trade. It left a big void in our lives internally here in the World Bank team that works on the business environment. And from that very first moment, the very first day that Doing Business was discontinued, we started working on the Business Ready report. So the work that we are really excited to show you here today is a baby that is 3 years in the making. It has been 3 years of effort, 3 years of inspiration as well, 3 years thinking on how to best measure the business environment, the conditions for trade to thrive in every single country, in every single economy in the world. This is a daunting task, as you already know from your own experience. And also on that note, we are always looking for experts in trade that want to participate in completing our questionnaires to provide us better data, so that we also can have better findings and have a consequence, right? Have a consequence in terms of driving policy reforms, driving investments, driving research. So this is the main purpose of the Business Ready report, to be a quantitative analysis of the business environment that can then promote positive outcomes, reforms, improving the conditions for trade all over the world. And now, without further ado, I will pass you to my colleague, Melanie, who has been with the team as well, and is a brilliant woman that works on trade, and she will conduct the presentation. We are, as Angela mentioned, we are looking forward to your questions, and we can address them at the end. I know that you will have many, because like I said, these are 3 years of work where we also had many questions and still have them. Thank you. Thank you again to our organizers.
Thank you so much, Nuno, for the kind introduction, and also from my side. Good morning, afternoon, and evening, everyone. I would like to thank the organizers, Angela and Julia. We are definitely excited today to be given this opportunity to present and disseminate our work on Be Ready. And I also have the honor of being joined by some of my colleagues. So you know already, Nuno Mendes dos Santos, our topic lead, and Margarita Malia. And we have Varun Agnat and Alex Pelveld also in Washington, D.C., and other more female colleagues connected online, Nurhan, Mari, and Milagros. So to get the ball rolling and to get us underway, I would be taking the next 30 minutes of your time, taking you through our newly developed and released indicators on international trade within the Be Ready report. As some of you may know, and for those of you who don't, the Be Ready is a new data collection and analysis project of the World Bank Group to assess the business and investment climate worldwide, accompanied by an annual corporate flagship report. So this is the first edition, which was launched 2 months ago on the 3rd of October in Washington, D.C. So the first rollout, including 50 economies. It is a key instrument of the World Bank Group's new strategy to facilitate private investment, generate employment, and improve productivity to help economies accelerate development in inclusive and sustainable ways. It replaces, as Nuno mentioned, and improves also the earlier Doing Business project. So within Be Ready, we cover 10 topics across the whole life cycle of a business. This means starting a business, operating one, till it's very, very closure. And international trade is one among these 10 topics. And today, it gives me immense pleasure to be here speaking to you on one of Be Ready's, in our opinion, of course, most important topics, international trade. International trade is an area that touches our everyday lives, from the food we consume to the clothes we wear. Life for all of us would definitely look different if it weren't for international trade. And the same is true also for the private sector and the productive fabric of the economy. So international trade has the potential to be a key driver of economic growth and is vital for private sector development. I could go on and on, but I fully recognize that this audience needs no further convincing about the importance of international trade. So to take this session forward, I will show you today's agenda. This is what I hope today's agenda to look like. In today's session, we will have 2 big sections, methodology and then results. We will start with a brief outline of the topic, then touch briefly on the topic scoring, present the many indicators covered by our topic, discuss our different data sources, and also leave ample time to be able to take you through and gauge your attention towards the results of the first Be Ready report, including 50 economies. To start with the methodology and the topic outline, the international trade topic measures different aspects of international trade. So trade in goods, trade in services, and digital trade across 3 dimensions, which we call pillars. The first pillar assesses the quality of regulations pertaining to international trade, so covering the sure features of a regulatory framework that are necessary to establish a non-discriminatory, transparent, predictable, and safe environment to harness the potential of international trade. The second pillar assesses digital and physical infrastructure concerning international trade and the quality of border management, thus assessing de facto provision of public services for international trade facilitation. And then the third pillar, called operational efficiency, measures the time and cost to comply with import and export requirements, participation in cross-border digital trade, as well as certain perceived major obstacles for international trade. Each pillar is divided into categories defined by common features that inform the grouping into a particular category, and each category is further divided into subcategories, and each subcategory consists of several indicators, each of which may in turn have several components, and the relevant points are assigned to each indicator and subsequently aggregated to obtain the number of total points for each subcategory, category, and pillar. On the next slide, I will show you the preliminary topic scoring. So for those of you who may be interested in our scoring, I will give you a very quick snapshot. Each of the 3 pillars has an equal weight in the total topic score. So as you can see here, 33.3%. Yeah, if we convert it into percentage, of course. And as mentioned earlier, Pillar 1 includes 102 indicators and has a maximum nominal score of 180 points. These then are later rescaled to a range from 0 to 100. And similarly, 106 total points in Pillar 2 are spread across 32 indicators and are also rescaled to up to 100. In Pillar 3, each indicator obtains a score from 0 to 100, and then the total points for this pillar are calculated by summing the scores in accordance with the weights of each category. So the total points for Pillar 3 therefore also range from 0 to 100. The scores for each of the pillars are then averaged to obtain the final topic score for international trade. And to zoom in a bit more, and again, for those of you who may be interested in our scoring, if we take the example of Pillar 1, we see that there is a total of 180 points based on 102 indicators. In most cases, the scores will be assigned on both firm flexibility and social benefits, which you can see here, firm flexibility points and social benefit points. This means that the underlying good practices have a clear positive impact on firms, operations, and society at large. But there are a few exceptions, especially in Pillar 1. These include components, for example, on sustainable trade policy, international commitments on sustainable trade, technical non-tariff measures, regulatory restrictions for domestic freight transportation, logistics service providers, consumer protection, where scores are not assigned on the firm flexibility side. So the nature of these good practices is such that in the short term, they may imply higher costs for the firms and may be harder for them to operate and grow. For example, some companies may have to invest more resources to comply with regulations on sustainable trade. But in the long term, though these good practices will likely be beneficial when accounting for climate change costs, as they may also lower firm costs for the private sector as a whole. So as a result of this ambiguity, these components will be scored on social benefits only. This explains a bit higher value on the social benefit side than on the firm flexibility side for Pillar 1. And then I think we all ask the same question. What does Pillar 1 cover and why is it important? So to give you a quick snapshot of our indicators for Pillar 1, The first category assesses the extent to which the applicable regulatory framework incorporates good practices that promote market access, practices on digital and sustainable trade, and international trade cooperation. So an adequate legal framework is important to facilitate trade, ensure compliance, attract investment, and also improve competitiveness. And the good practices on digital and sustainable trade are, of course, important to promote access to digital markets, promote innovation, reduce environmental impact, support sustainable economic growth, good practices in international trade cooperation are crucial to foster collaboration, ensure consistency, and also support the harmonization of international regulations. Good regulatory practices in international trade are important for establishing a transparent, predictable, secure global trading environment. And the second category measures whether the regulatory restrictions pertaining to the areas of international trade in goods, services, and digital trade follow recognized good practices. So an effective regulatory framework also pursues legitimate public policy objectives and may impose restrictions that are important to protect public safety, health, and also the environment, as well as to address market failures. So, however, these restrictions, they should create market distortions that impede trade flows, lowering also import penetration and export competitiveness for trade in all areas, so goods, services, and digital trade. It's important to have regulations that strike a balance between these objectives and also the restrictive requirements they impose, which must be always proportional to the pursued objectives. So these must not be designed to hinder competition, which would impose negative, of course, externalities on other market actors, and including consumers. I will give you also a quick snapshot of our questions for Pillar 1, which are divided across 4 different questionnaires. So this is now a bit of a more practical and realistic example of what our questions look like. We have spoken about our indicators in a more abstract way, but this slide gives you a glimpse of what our questions actually look like under Pillar 1, on the subcategory on digital and sustainable trade. We have questions that seek to assess the legal validity and enforceability of electronic contracts, for example, that are issued outside the country. So one of our questions, for example, seeks to assess whether the domestic legal framework legally enforces electronic contracts or signatures that are issued in a foreign country. Our questions are actually distributed, as I mentioned before, across 4 different questionnaires. So the first one would be trade regulations in goods. Then we have one for trade regulations services, for public services, and then the 4th questionnaire on digital trade. But yes, so this slide should just give you a flavoring sense of how our questions look like, and most of our questions are binary, so they require just a yes, no answer and the legal basis, of course. But we also have a few numeric questions, as you can see here. For example, the last one asking for tariff rates. We also have one on duty de minimis, which is also numeric. But most of them are binary. And then we come to the second pillar, pillar 2, the public services trade facilitation pillar. The first category, as you can see here, the digital and physical infrastructure, assesses the implementation of trade facilitation measures, so on electronic systems and interoperability of services, for example, the transparency and availability of information, and also the physical infrastructure. And these trade facilitation efforts enhance definitely the transparency, accountability, and efficiency of the clearance process. And they can reduce compliance, transaction costs for firms, and also increase their participation in international trade, as well as improve the overall competitiveness. So the second category assesses the implementation of such trade facilitation measures on risk management and coordinated border management, trusted trader programs, and these efforts enable the efficient allocation also of public resources and can reduce compliance and transaction costs for firms. So as such, they increase safety and security in trade processes, while also boosting government revenues, creating a beneficial environment for both public and the private sector. So I would also like to show you a couple of questions from the pillar 2 to give you an idea of how our questions look like for the public services pillar. Like in pillar 1 again, these are just a couple. We have many questions. We took a couple for you to give you a sense of flavor of what our questions look like and what we cover. And so, for example, here for one question on the agency integration, we ask which domestic public sector agencies are fully integrated into this into the electronic system for international trade. We also ask, for example, is it the tax administration, the sanitary and phytosanitary agency, or are there other agencies integrated into the electronic system? Also in terms of whether different stakeholders, for example, are part of the international trading process, are they integrated? So the value of any electronic system for international trade lies in its depth, not just the existence, but its depth and the extent to which it's able to integrate many agencies, stakeholders, and has the desired features, of course, also that are recognized in literature as part of the trade facilitation agreement, and those that are considered good practices. Again, our indicators are motivated and embedded in good practices and that have been also identified by other international organizations and are considered in existing literature to be the backbone of establishing a well-functioning international trade system. And then I would like to show you our indicators for pillar 3. The one we also call operational efficiency. So Some of you who are familiar with our work in doing business might see also some similarities. The first two categories of Pillar 3 assess the time and cost borne by the private sector when directly exporting and importing goods. Increased time and costs of compliance may definitely hinder firms' ability to access the global market, representing a substantial barrier to trading goods. Factors also such as lengthy customs clearance procedures, lack of coordination among the border agencies, lacking trade infrastructure, limited logistics services, increase definitely time and costs to comply with export and import requirements. And the third category assesses the percentage of firms in an economy that exports digitally ordered goods. Also operational and transaction costs, as well as lengthy procedures for exporting digitally ordered goods. They also create trade barriers, which may constrain the growth potential of trading firms. And then the fourth category assesses the share of firms identifying customs and trade regulations, as well as transportation as a major obstacle to trade. So these are perception-based questions on major obstacles to international trade, capturing subjective experience and viewpoints also of firms, shedding a bit light on the challenges that businesses face when trading internationally. I would also like to state that the data for the Pillar 3 is collected from our sister unit and enterprise survey, to which I will come on the next slide. This is actually a good moment to explain the different data collection sources for Be Ready. So we have, as maybe some of you have worked with our data in the past, and for those who know our project might be familiar and know that we are only as good as the quality of our data. So it's very important to understand our different data sources. The data for Pillar 1 and then Pillar 2 is collected by consulting with experts from the private sector. So for Pillar 1 especially, we have experts, for example, trade economists, trade lawyers, trade consultants, trade managers, and other trade experts, for example, from the academic field. And then for Pillar 2, we have more professionals like practicals, like trade freight forwarders, customs brokers, clearing agents, shipping line agents. So these experts provide valuable insights into the regulatory framework governing international trade, and of course the provisions of public services, so from their own experience. And that's why we consider that the exercise to reach the right expert is of immense value, just to be able to identify the expert who not only understands the regulatory framework for Pillar 1, for example, and is able from their knowledge and day-to-day operation to give us an accurate and representative assessment of the regulatory framework. And the same goes for Pillar 2, where we are reaching out to trade practitioners, to trade professionals who in their day-to-day activity, let's say, are going ahead and are very familiar with some of our indicators, with some of the questions. So we seek to assess that the assessment or the response from the expert is not a theoretical one, yes, for pillar 1, but also for pillar 2, especially based on their day-to-day experience. For pillar 3, as I mentioned earlier, the data is entirely collected through our sister unit enterprise survey. So the questions to pillar 3 are collected through firm level surveys. These surveys provide representative data on time and cost to comply when directly exporting and importing goods, participation in cross-border digital, and the firm perceptions on major obstacles, as I mentioned earlier. A representative sample of companies captures variation of user experience within each economy. But I must also highlight how collecting the data on time and cost through the firm level surveys is fundamental to capture the real experience of these firms on the ground and to overcome the need for narrow case study assumptions. Yes, so that's our methodology in a nutshell. And now I would like to present the results for the international trade topic from the first Be Ready report 2024, covering the first 50 economies. As mentioned in the first rollout, so we covered 50 economies from various regions. These will now further be extended to 110 economies in the second rollout, so 2025, and then another 50 for the rollout 3. And then we will have the whole sample at the end of 2026. And then we should be able to have a sort of a global coverage. But yeah, just to come back and take you through this slide, it shows our topic scores on the international trade indicator globally. And what we can see from the slide is that good and bad performers exist across different regions. So our scores are out of 100, as you can see also at the bottom of the slide. They represent the topic score for an economy. And then based on the color, you can see how good they perform. This is for the whole topic score, so all 3 pillars that we've assessed. And we see that this variation across different regions include good and bad performers. So for example, good performers we also have in East Asian Pacific, which scores very high, around like a 90, based on the color. It might be a bit tiny on your screen. But then we have, of course, Europe and Central Asia, which also score pretty high, and some economies in the Sub-Saharan Africa region with high scores. This suggests that good practices can be implemented and adopted in any context, and that economies can learn from one another in their efforts to improve the business. Maybe to zoom in a bit more on the next slide, we see also the variability, the variation of scores across the different regions. So if we exclude the first one, so the OECD high income, then we see that, again, good practices can be adopted and implemented in any context, and that economies can learn from one another. And we have a quite good variability across the regions. And then if we take another look at the variation of scores by income level, then yeah, it is expected ex ante that a better business environment would tend to lead to a higher income level or vice versa. And our scores show that be ready economies do not need to be rich to develop a good business environment. While of course be ready economies for international trade have a strong positive association with the GDP per capita, of course with high income economies having a higher average score than those lower in the income classification. But some low income and middle income economies also achieve relatively high scores. For example, on the left side, you can see a list of upper middle income and also lower middle income economies, and also low income economies that are present in the top 2 quintiles of the topic scores. So we have cases like Morocco, Philippines, Rwanda, Vietnam, which are some of these examples. And yes, then I would like to show you another interesting trend that we observed in our data. We see that across the Be Ready report, across different indicators assessed by the report, there is something we call the existence of a public services gap, here shown across income groups. So what do we mean by public services? These are the indicators on Pillar 2, as I presented earlier, the ones that assess the public services needed for the facilitation of international trade, those that pertain to electronic system for international trade, also risk management, coordinated border management, trusted trader programs. So we see scores on this pillar to be lower, or they tend to be lower than the scores on Pillar 1, the regulatory framework, which in a way suggests that economies are better at enacting regulations than providing public services. And the Be Ready data provide evidence of all public services gap across all regional and income groups. And that is definitely a notable difference between the regulatory framework score and the public services score. So we can see that the average economy scores on Pillar 2 are consistently lower than those on Pillar 1 across all income levels. And
Melanie, sorry, I just wanted to say we wanted to leave some time for Q&A, so I don't know if you wanna maybe wrap up.
I'm wrapping up. I'm wrapping up. Sorry, I'm taking too much.
Sorry, I wasn't sure if you were seeing the time.
Yes, I think we have like 2-3 slides left, if I may. All right, thank you, Margarita. Yes, and with that, I will move on to the one of the last slides in the section we have on general trends that we observed, and that's on the high operational efficiency scores and the firm adaptability. So this slide that you can see indicates that economies have high operational efficiency scores that are higher than the average of the other 2 pillars, for example. For most economies, these patterns also in our assessment and our analysis highlight the adaptability of firms in environments that are marked by deficient public services, as we saw on the last slide. And we consistently see that the average economy scores on Pillar 2 are lower than those on Pillar 1, as I mentioned also before. And as well as those in Pillar 3 on operational efficiency. This seems also to suggest that firms have somehow developed a coping mechanism to navigate their respective business environment and adaptability. So I would just shortly like to note on this that the data is from firms especially which provide input for the operational efficiency from the formal sector and exclude very small or recently established firms. So it's very much possible that within a sample of large and older firms, they may be less sensitive to weak regulatory and public services environments, so which could then also perhaps explain the high scores and operational efficiency. And then last but not least, a spider chart which clearly shows the distribution of the 3 pillars, pillar 1, 2, and 3, scores across the different regions. And then you can see which region is doing better in the operational efficiency score, the blue one, the pillar 3, or pillar 2, public services, or pillar 1, the regulatory framework. I would like to invite everyone in the audience to check out our website in more detail. So it has data at the very granular level and the results of the international trade data collection for Be Ready 2024. You can download the report, and the QR code takes you to our project's website. So if you want to scan it, and yes, then also, if you would like to participate, I would highly encourage you, all of you who may be interested in participating in Be Ready, to express your interest by sending us an email. You can scan the QR code, which will lead you to your mailbox with a pre-populated email text. And then you can customize it and then reach out to us. And yes, thank you all so much. I think I stole a bit more of your time than usually planned. And I will hand back to Nuno to open the floor for the Q&As. Thank you so much.
Thank you very much, Melanie, for the comprehensive presentation. And as Melanie mentioned, we are really opening the floor right now. Please, any Q&As, any questions that you may have, now is the moment, or at least the initial moment. I would say that you now have our contacts, and we want this to be really a partnership into the future. So we can always answer any questions, any queries that you may have after this session, particularly after you read the report, after you check our data. Melanie touched it, and it's really an improvement that you have made also on doing business. All the granular data is available, even the responses of the experts. So you can choose the country, you can choose the anonymized experts. So you can choose the anonymized responses per each data point that we have. For example, some of you work more on the regulatory side. You can choose the specific aspects of regulation that you focus on. Some of you work more on the logistics side. You can focus just on the data points that focus on logistics, and you can have an idea of how the world is, or at least the economies that we measure are on those data points. Do you have any questions coming?
Yeah, no, I wanted to emphasize the anonymity, since I saw at least one of our contributors connecting, so it's very important. We obviously don't, I mean, the contributors are free, and we provide a certificate of appreciation, so they're free to say that they're doing, but just to prevent any possible undue pressure, we preserve their anonymity. If they want to disclose, they're obviously free. But yeah, we don't want we don't want to force them.
I would note this is all correct. It's a lesson also from doing business where some governments did impose some pressure on our contributors. Other improvement on this regard is the fact that each questionnaire is paid at a gross rate of $400. So any expert that wants to participate in the 3 questionnaires that we have, regulation on trading goods, regulation on trading services, and the services for trade facilitation, electronic single window and such, each of these questionnaires is paid at the $400 gross rate. So it's a little bit of a token of appreciation. There is a deadline for participation. So right now, in fact, it's more than a deadline. There is a general timeline. We are right now doing the data collection for the second cycle. In the second cycle of Business Ready, we are covering 110 economies. We started already the data collection process back in October. And we are in the middle of it, almost approaching the end. We should finish it by January or February. We will then have, so this will be for any new experts that express their interest and that complete the registration form and we confirm their experience on that economy. They will be given usually 2 to 3 weeks deadline. So this is the first part of the answer. But then our process doesn't stop there. After that, the collection is ended for all economies, so let's put it end of February at most, we then start the data validation stage. So we do go to each data point, we check discrepancies with the information provided by experts, the discrepancies with information provided by governments who also complete the questionnaires, discrepancies with information that we already know ourselves as experts on several economies, and we do validate each data point. And then from there, we start producing the report we start analyzing the data and producing a report after the data validation. So it will be around May, June. And then the idea is to publish again around September, October, just like we did in 2024. This is a good question.
But that it's an annual process. So so right now, I think we have most of experts. We are still looking for experts in some very specialized and smaller economies where we're maybe it's not always easy to find trade experts. So we still have some openings for this year, but I think I think I wrote to someone who said is interested to participate. I just want to open because it's an annual process. So we are because next year we will have 180 approximately economies. And so anybody who's interested can start sending us a message and we will start putting in their system so that they will receive an invitation to participate in the next fall probably. So and that's I think also the cool thing about it is that it's not a just one-time thing. It's every year, and obviously, we have already some returning experts. I'm very excited.
And not just a cyclical. It's also the idea is to cover the whole world again. So we started with 50 economies, 110 this year. It will be 180 or around 180 next year, and this will keep going. We hope for many more years, more than doing business. We have
another. Oh, you saw it already, but please.
So we have two questions that came meanwhile. One is on the impact on emerging markets, considering the current challenges between China and the USA. I would say first that this is a bit out of scope for our project. I did work on emerging markets a lot before joining the bank, and it's all economies that we cover. I would say one thing that is very important right now, which is we all aim for predictability, and the future years. And also in our project, we do have proxies, indicators that are proxy for predictability and certainty. In the next few years, we will not have that. And this is something that we hope that comes somehow in our data, that we'll be living through uncertain times, and that firms, I'm not just, when we talk about emerging markets, I prefer to say firms in emerging markets will have some trouble in adapting and reorienting. Also in developed markets, right now, even the trends towards nearshoring, friendshoring, those are being put in question as well with the discourse that we have had from US authorities recently. So while this is completely out of scope, this question out of scope from what we measure, there are indicators that can serve as proxy to some of the difficulties that firms in emerging markets will face in the near future, at least in the next few years. Then we had a question on SMEs. So I mentioned that really at the introduction that we have three main goals with Be Ready. The first one is to inform policy, right? Policy reforms. The second one is to also drive business decisions. The third one is to be a tool for research. This question touches the second one, right? The driving business decisions. SMEs, as we all know, have a little bit more difficulty because they have less resources than big companies to conduct market research all over the world. So the idea for Business Ready is to provide them with the initial indicators on, particularly on trade, but also in other topics. And Melanie mentioned that we cover all the life cycle of a company. So let me just briefly mention that indicators, for example, such as those in dispute resolution, are very important for trade as well. If courts don't work, we clearly trading firms have more difficulty in entering or at least anticipating the entrance in markets. So that is also covered there. But the point being, SMEs should use this report as the first level of analysis into the expansion of their business activities. So they can already have a snapshot of how the framework for trade works in economy A, B, C. And this is much more important for them than for bigger companies because they do have their own resources to conduct market research on the ground. So I do hope that the Be Ready report may be useful for SMEs and even more useful than what we had in business, that we had in doing business, which was much more limited. And Melanie mentioned that efficiency is the only indicators that transitioned to Be Ready, but even those indicators are completely different. We had very narrow case study that applied to a specific product in a specific order to a specific partner and were not representative. While right now, even those, the times and costs indicators on times and costs are representative. They are conducted, the data comes directly from firms that tell us for their typical transaction, the complying with import requirements, export requirements costs us this percentage of the shipment. This takes us this time to clear our requirement. So again, this is something that firms, and particularly smaller firms, have to pay attention to because this completely impacts their bottom line in the end. Do you have another question, Margarita?
We have a few, but we're just about I'm replying to some in the chat, but I'm just saying that I think we are about to the time. So I just want to Angela actually asked if we can move back to the slide with scan code, because I think some people are just interested in scanning. Yeah, thank you. But I think then in a couple of minutes we probably have to close because we are just about at the time. But yeah, thank you so much. Really, it was wonderful to engage, and I hope, as I said, that this is only the beginning of a partnership.
Yep, that is the idea. Thank you again for the Organization of Women in International Trade. We hope to continue this partnership. We hope to engage with you all, not just at participating in our questionnaires, but also really in a framework of partnership that we can understand that we can work together. We have the same objectives. So it is good that we can use these synergies and push for trade to thrive in the next uncertain years that we'll face.
Good, wonderful. I mean, honestly, there are a lot of questions I can see, lots of interest. So well done. Thanks for the wonderful presentation, Melanie. And what data you're collecting, what data points you're collecting. It's very precious that we have market research already done from the World Bank with Be Ready. I like the title, Be ready for trade, be ready to export, import, be ready to know what's going on in the market. So that's really very precious. And I'm sure the people who are on the call and the people who will be watching the recording on our YouTube channel will get lots of value out of this because it was eye-opening. So I don't have anything else to say rather than looking at the time, 1 minute past the hour. Any closing remarks from Angela?
So just again, thank you to our speakers and more. And again, this is the beginning of what we hope will be a great partnership. We know there's lots of good work happening in gender and trade at the World Bank. We have experts across the world. So you've heard it many times, lots of opportunities to get involved, depending on your background, your geographic location, your expertise. Scan this, we'll send it out to our members as well. And of course, we'd love to have more members in OWIT Global and OWIT Local. So learn more about that at www.owit.org. Thanks everyone for joining us today. And thanks to our speakers. You're amazing.
Thank you so much. Wonderful for the participants as well. And have a wonderful, wonderful continuation of your day and evening or morning. Thank you so much, Nuno. Thank you so much, Melanie and Margarita. And thanks, Angela, for organizing us. This was really valuable. Thank you.
Thank you so much.
Thank you. Bye.